Next, I'd like to invite Mr. Wong Wai Ken, the country manager of Stashaway Malaysia, to share his knowledge on robo-investing. Mr. Wong has vast experience in asset management through his time in the investments division of Khazanah Nasional Berhad and Premium China Funds Management in Australia. A big welcome to Mr. Wong.
Hey guys, welcome back to the show. This is Jason Loh over here, and I have Wai Ken, the country manager of Stashaway, joining us in today's webinar session. So welcome Wai Ken to Data Asia. Hi.
Hi Jason, how are you? And hello to the audience as well. Hope you guys are doing okay.
The virtual audiences that are actually attending this show with us today, right?
Yes.
So
all,
with today's
all
topic,
clapping hands, all standing.
all virtual clapping hands right there. Oh, hopefully they will do it, right? So with Wai Ken today, I have actually invited Wai Ken from Stashaway to talk about robo-investing. What is it about, and how has Stashaway been growing throughout the pandemic era? I believe we have a lot of interesting questions ahead, so let's jump right onto it, right? So first things first, Wai Ken, why don't you explain more about why Stashaway, and for the audiences that have heard Stashaway for the first time?
Sure, thanks Jason, and really happy to be here. Basically, Stashaway is a digital fund manager. We are licensed by the Securities Commission, but the way we offer investment solutions to people is much more digital and a lot more affordable and a lot simpler as well. Imagine in the past where you had to fill in a lot of forms, meet an agent, go into a branch, but now you can just do it in your home by downloading an app. And what we allow people to do is also to get global exposure to their investments. So you can actually spread your money around instead of having it just concentrated in Malaysia. So we were founded in 2016 in Singapore, where we are also regulated there by the Monetary Authority of Singapore. And then in 2018, we launched in Malaysia itself. And I myself, with the team in Malaysia, have really grown Stashaway Malaysia to be the most largest and also most successful robo-advisor in Malaysia.
Right. So in terms of robo-investing or robo-advisory, it has been a term that we read a lot in articles, in finance, investment-based blogs and things like that. Can you elaborate a little bit more on what this term actually means?
Definitely, yeah. I think the term sometimes can make people feel a bit confused, a bit worried, a bit scared. I think the understanding that it's basically a robot with no human control connected to the market is also something that worries people because they want some control of your money. I think the best way to think about robo-advisors or robo-investing is a way to actually digitize and automate the way you invest. And I would actually break it down into two parts. So the first part is when you sign up that time, you have to really, if you're not a financial expert, you're not an investing expert, you will also be guided from our side to pick a risk portfolio that really works for you. So you don't need to be an expert, you just need to know your own financial goals. So that's the first part. We really help you pick a portfolio that's right for you. And then the second part is when it comes to actual investing as well. We use data, we use technology to pick the right portfolio for you so that you can actually invest through the economic cycle. Doesn't matter whether it's a recession, doesn't matter whether we're in good times, and then doesn't matter how many cycles you actually go through, we will change the portfolio as we go along. So we have an investment management framework which helps us take in data from the economy to look at things like growth and inflation, and that helps us decide what portfolio is best for you in that particular part of the environment. Just imagine last year when we went through COVID and we went through a recession, and then now we are coming out of a recession. Your portfolio should also adapt to the situation. So that's what we do. That's what we do for you. So all in all, just to summarize, robo investing digitizes part of your investment journey from when you pick the portfolio to investing on an ongoing basis for you. We use data, we use technology to really have the best intelligent portfolio for you. So you don't really have to worry about looking at your portfolio every day, picking new things, switching here, switching there. You can just kind of put your money in and it will go on autopilot.
Right. However, I believe a lot of my peers are actually in Stashaway, right? They will believe in what Stashaway is doing and how this kind of robo investment technology is helping them to make smarter investments. But why did you feel that having some kind of AI algorithm here will be better than human judgment? Because we still have a lot of real human finance managers, investment managers helping people, to manage their funds and things like that. So what's your take in comparing actually like a real human analyzing this kind of data as compared to technology analyzing it instead?
Yeah. So obviously, you as an investor yourself, you have a choice of managing the money yourself, or you have the choice of giving out your money to an expert like a fund manager. And this fund manager, you can choose players like us who are mostly digital, or you can choose a traditional fund manager who takes an active approach to picking the right stocks to beat a benchmark. So studies have shown that actually these fund managers are not just more expensive, but they are usually charging 5 to 7% in fees. So 5% sales charge and 2% management fees, and they don't beat their benchmarks on an ongoing basis. So because of that, we think there's a much more lower cost way that we can actually invest on behalf of clients. So because of that, we use exchange traded funds, which are much lower in cost. And because it's passive in nature, we don't worry about beating the market. We worry about having people get long-term good returns. So because of that, we have systemized the way we have invested. And like I said before, we can actually invest through the economic cycle, whether it's good times or bad times. And that way, as an investor, you are assured, firstly, that you are getting the best low cost approach to actually investing. Secondly, your money is with an expert. So you don't have to worry about changing your portfolio yourself every time you feel like there's a movement in the stock market. So, if you think about people, right? You might have experts who are very good at picking stocks, but at the same time, you've got to pay them a lot of money, right? And then you think about yourself, maybe you're not so good at picking stocks. You might not have your emotions all in check. So we are really about combining the best out of both worlds. All you need to know is your own investment goals, and we will manage the money for you because using a system, using data, we are very analytical and we don't worry about human emotions. At the same time, we get to deploy your money in the way that's best suited for the economic cycle. So you combine all that together, and it's a very good value proposition, which overall you can see why automated investing is better than sometimes investing yourself or giving it to a very, very expensive fund manager.
Right. Since you actually talk about the economic cycle and whatnot, as we all know right now, we are current in economic phase of COVID-19, where all these kind of disruptions happening from the pandemic, a lot of businesses can't operate properly and things like that. So in terms from an investment, a digital investment kind of company, what kind of trends have you been able to unravel during this pandemic anyway?
Yeah, so the pandemic was obviously something that we didn't see coming, and most of the time, a lot of the economic or financial crises are things that we don't see coming. They are crises because we cannot plan for them, we cannot prepare for them, we cannot factor that in terms of how we run our business and how we position our portfolio. Which is why when a crisis happens, it happens in a very drastic way. So we saw the markets last year drop 35% in the US, and most of the equities markets around the world also didn't do very well, including Malaysia. So because of that, I think the big thing coming out of COVID-19 is to basically to disaster-proof your business, right? To have it be very resilient. And the way you can have it be resilient is not have it rely so much on manual processes and also brick and mortar physical kind of locations. I think digital is the way to go, not just to respond to this pandemic, but also to prepare yourself for different channels after the pandemic. Imagine if you're a typical retail chain or a restaurant, you can actually have two channels instead of one. Obviously, the economics is something that you have to work out for yourself. I understand some platforms have very high margins just to be on their platform, but there's always a hybrid solution, right? So I think that people should really look at digital or digitizing, because that way you don't have to pivot your business. For example, during this pandemic, banks had to really scramble to then have everyone work from home and have everyone have new SOPs for clients. Whereas at Stashaway, we've never relied on a physical presence. We've never relied on physical agents and all that. So we just had to take care of our people, make sure they're all happy working from home. Operations didn't change at all, right? So we actually saw that a lot of our clients' uh, um, investing didn't wasn't affected at all. So I think digitizing is definitely the way to go, and I'm sure we can talk about some investing trends because of COVID-19 later as well.
All right. So do you think that the trends that you mentioned earlier on, it's something that might continue post-COVID when everything gets back to normal, and we can go out again and things like that?
Yeah, I think so. And I think it will be best of both worlds, right? Because I think what people are seeing now is that by working from home, as long as there's accountability, people can actually deliver their work, you know. So I think there'll be a hybrid situation in the future post-COVID. Having a lot of digital in your business, whether it's flexibility from people working from home or automated systems, it actually gives you a lot of efficiency. For example, you just don't need that much of floor space in your office or in your factory if you have digital ways of working. And then at the same time, humans being humans, we really want to enjoy life. So we want to go out, have experiences, meet a friend, have a meal, have a drink. So I think those things will definitely be back to normal. So it's also about having two um, two best of both worlds together. You have people out there in the world doing what they really like, but also have the flexibility to work from home and do a lot of things from home, buying things online and all that. So I think there'll be a combination of all of these things. I really don't want a future where everything we do is just from home. I still want to go shopping. I still want to meet people, of course. I do business travel and all that. So I really think that some things will stick, and for digital businesses, there will be a new level of acceptance because this whole 2 years has forced us to change our behavior.
Mm.
Food delivery will be up there. E-commerce will be up there. But I think restaurants and all that will have a hybrid solution where sometimes people want to eat at home, sometimes people will eat in the shop.
Right. So thanks, Weiken, for sharing about these trends or what you've seen while running Stashaway throughout the pandemic, right? So currently we're going to take a short break, and coming right back, we're going to ask Weiken more questions regarding how Stashaway is actually able to also help not only consumers but also businesses in terms of investments. Coming right back after this. Welcome back, guys. This is Jason Low, and with me here today is Weiken, the country manager of Stashaway in Data Asia. So, wait, Weiken, welcome back, man.
Hey, good to be
So
back.
earlier on, you mentioned a lot about how Stashaway is helping people, consumers, to actually do investments, work on like robo advisory, robo investing, and things like that, right? So, what about in terms of businesses? Can businesses also actually use Stashaway for investment purposes?
Yeah, so as a licensed fund manager, we can actually manage money both for individuals and also for businesses. Uh, but those two things are quite different. For people, their goals are usually like for retirement or to buy a new home or to buy a new car, kids' education. Whereas for businesses, it's really about treasury solutions, right? To how do you maximize the return on your spare cash, or how do you manage your FX? So those two things are actually different. And for businesses, we only accept if they want to really invest in using our ETF portfolios. So just to clarify, we actually have two services. The first one is cash management, where we have a projected return of 2.4%, which is better than FD, but you don't have to lock your money up. So this is called Stashaway Simple. This one is not really open to businesses because this one is, for us, we dedicate this one to retail investors. On the other hand, we have ETF portfolios. We have 12 of them of different risk levels. The range of returns are from 3.5% all the way up to 17.5% per annum. So if SMEs and businesses want to use this for their own investing, for the business investing purposes, they are absolutely welcome. So because of that, businesses really need to make the choice for their own platform, for their own business, right, to see what's best for their spare cash. If they want to not risk any of the cash, they just want to have it sit somewhere and earn some interest, then a typical money market fund or a FD is probably good for that. The reason why we don't really allow people to use Stashaway Simple, the cash management solution that we have, is because the tax rules are changing around that. And then this year, actually, the tax will kick in for SMEs. But if you think that, you based on your business, you want to take a little bit of risk, even on the low risk portfolios, for you to really invest and grow your treasury spare liquidity, the cash, then you can definitely consider, and we can speak to you about that.
Would you feel that in this current pandemic and whatnot, right? Is it even suitable for businesses to move into these kind of investment schemes? Or actually even a lot of businesses know about investment in terms of a business sense? What can they do within this field and things like that?
Yeah, I think it depends on the business itself, because sometimes some businesses are run as an extension of the business owners. And let's say they are a sole proprietor, they feel like there's no real difference besides themselves as an individual and then their business. So they can use the business to kind of like complement their lifestyle, right? If that's the case and you are the only decision maker, it's really up to you whether you want to invest your spare cash or not. Maybe your business is going through a transition. Maybe you have spare cash and you want to put that to work. It's really open, right? But if you're talking about let's say a Berhad or Sendirian Berhad company that is meant to run for a very specific purpose with a board of directors where a lot of approvals are needed, it's best to run the business in a very clean way, to run the business for the business purpose only and not really focus about personal investing. Because if let's say you're in the restaurant business or the food manufacturing business, then you should be just focused on that. The way businesses invest is either by hiring new staff or getting a new system, or maybe acquiring another company, expanding the footprint. So these are all business investing, right? I have a lot of business owners using Stashaway, and what they do is when the business does particularly well, they will take out dividends from the business and then they invest by themselves through their own individual account, right? But also there are some micro SME owners who are very flexible because they own the business 100%. It's really up to them whether they want to use that business funds to invest using Stashaway or not. So it depends on the goals of the individual or the SME itself.
Right. So for SMEs per se, or is there even a limit, like minimum at least to how much, maximum how much they can go in terms of investments? Because for even if you talk about micro SMEs, like you mentioned earlier on, or even businesses that probably are not having too much extra cash at hand, but they still would like to explore and try out Stashaway as a sort of investment arm, right? Is that possible? Are we looking at a range that makes sense for them?
So because Stashaway is more of a B2C platform, meaning if you, as an individual, if you just download the app, you can sign up very, very quickly, right? For a business, there's a lot more paperwork that needs to be done, so that process can be a little bit manual. For example, we need your some incorporation forms and things like that, some shareholders approvals, things like that. So because of that, it needs to be a little bit more manual. And to go through the trouble, at least you should look at investing a sizable amount. So there's no hard minimum. It's really up to you. We have had a handful of businesses sign up. We start with less than 100,000. But for you to really get the most out of your platform and make the paperwork worth your while, at least consider a sizable amount before investing. So, like I said before, it's really down to what the business wants to what the business wants to achieve out of all of this. If they are just looking for a place to put their cash and have it grow steadily, then of course we can think about doing that. If it's really to look at putting your money somewhere where there's absolutely no risk, right? Then I think they are better off in a traditional money market fund because well, investing does come with risk, and you really have to look at your entire business to see whether it's worthwhile doing that or not.
Right. So earlier on during the break, we had actually had a short chat about how data is actually influencing decision-making processes and affecting how things are being done these days. Maybe you can continue to elaborate a little bit more to our audiences today.
Sure. Yeah. So I think there's data is very valuable, and it is uh, very crucial in making business decisions in this day and age. If you don't know your segments, if you don't know the unit economics and the growth rates, then you're basically flying your business blind. And everyone that runs a business here should really think about digitizing your business, at least to capture the data that comes in. Just looking at financial statements alone in this day and age is not enough. So let me talk a bit about two sides. Firstly, what data means to your business, and then secondly, how data can actually um, form good habits for you to invest on a personal level. Okay. So on the business side of things, because we're digital, we collect information and we pay very close attention to a lot of investor behavior. For example, how much they invest, how fast they grow their deposits, their behavior depending on their returns. People making losses, people making gains act in very different ways, right? So we also look at our margins very closely because we only charge 0.8% on our management fees, which means our revenue is only 0.8% of whatever you invest. So as you can tell, immediately it's a scale game. It's a very low margin game. So because of that, we put our cost structure in a very disciplined way. So whatever fixed costs we have, we try and minimize that. We try and introduce variable costs whenever it makes sense. When we work with people, we try and make it at least performance-based or incentive-based so that we don't take on the risk of paying for something but not having it succeed. So then we have also a dedicated business intelligence team, which helps us review this data and find out insights. They tell us when the customers are withdrawing money, when they're putting more money in, what segments are putting in money, where the money is flowing. Is it from Stashaway Simple, the cash management product, or is it the ETF portfolios on the global side? So we get a very good idea live and also a little bit on the rear view mirror what's happening to the business. So I think everyone needs to first of all capture that data, and then to also have at least one person look at this data on a full-time basis so that you can actually make decisions based on data. I think the business owners of the past tend to act according to their experience or their gut feel. But in this fast changing world, you have to use both. You have to use your experience and you have to see whether you are right or wrong based on the data that is coming in. The good thing is with data coming in, you can actually do a bunch of small experiments. You don't have to invest like so much money, like millions, hundreds of thousands to doing something. You can do a small experiment. For example, you can do some digital marketing online and see whether it works. You can sustain it for maybe like 3 to 6 months. If that works, great. If it doesn't, then you can look at other ways, changing your digital marketing approach, changing what pictures you use, what text you use, all that you can change. So based on that, I think there's so many ways that data can help you run your business better. So that's the business side. On the personal side, I think you need to have good habits, and the way you have good habits is through investing by yourself, and to have a time invested in the market which does justice or is fair to the investment platform. If you invest one day, 1 month, maybe it's not enough to really see a result. But if you invest for 6 months, 1 year, we've been around for 3 years now, then you can really see the long run results. So a way you can form good habits is by looking at the data. if you look at, let's say, oh, today the market is down 1%, that means Stashaway is not good, right? So that I think is not fair. I think what's fair is that you look, how long has Stashaway invested my money for? Let's say 1 year, and then you look at the returns and you ask yourself, okay, if this positive return, let's say 10%, is it enough for me for my long term? So I should look at taking more risk, or I want it a little bit more less aggressive because I didn't like how it go up and down in the last 1 year. So I maybe lower the risk as well, so I can expect a lower return, but at the same time have more peace of mind. So data from the investing side will also help you form good habits and have you have a good peace of mind so you can invest for the long term. So we saw very interesting things last year during March and April because obviously COVID hit and the markets were also hit very badly. So the US market fell 35% in a span of 4 to 5 weeks. So that's a very, very scary, very fast decline. And naturally, that's a very good setup for noticing different behavior. For example, we saw people with very little investing experience, meaning they never invest before, they're first time investors. We saw them do the wrong thing, which is to panic and then sell at the bottom, right? And then you had people who were a little bit more savvy, more experienced, and these people either held on or they added to their investment. So they bought when on the dip, they bought when it was low. So the ones who actually did the wrong thing and sold when when the market was at its worst, they realized minus 5% return. Whereas those that continue to invest actually got a positive 11% return. So there's a difference of 15, 16%, right? Not just 11%, right? Because the negative side to add on as well. So the spread is like 15, 16%. So there's a huge difference between losing a bit of your principal and actually recovering back your principal and then making more gains. Of course, this is something that if you look in hindsight, is the wrong thing to do or the right thing to do. And you don't really know sometimes when the market is going up and down, whether it's the right or wrong thing to do, which is why you need good habits. Because if you're invested in a broad ETF-based investment like Stashaway, it's not like something is wrong with the entire market. It's just that COVID hit and there's something wrong with the health situation, which is impacting the economic numbers and also the company, right? The companies that are in the overall index. If it's something that's happening to one specific company, let's say like an airline or let's say like a restaurant company, then it's a whole different issue, right? Like owning a single stock is very different to owning a diversified portfolio. So if you're investing in a diversified portfolio and you see that the markets are actually going through a correction, which is around 20%, or a bear market, which is more than 20%, you can actually look at honestly buying the dip and investing more during bad times. We actually saw some of our biggest investors put in more money during the COVID situation versus the very young people or inexperienced people who were not investing or even withdrawing during the worst times. So good habits is important, but how do you form those good habits? You must use data to inform your decisions. If you just rely on your own gut feel, your own experiences, then you're always going to do the wrong thing. You're going to buy into something on the way up when you're very excited, and then when you feel the maximum amount of fear at the bottom, you just sell. So all in all, it really comes down to a combination of having an instinct and you use data to supplement that.
Right. So since we're on the topic of data and how data is actually helping businesses, when you look at the trends in Malaysia and also worldwide or other countries, or I know Stashaway primarily has very strong presence in Singapore, right? Do you see like Malaysian investors in terms of either their businesses or their individuals to be very different in terms of their appetite, in terms of what they're willing to try compared to the rest of the world or like even our neighboring country like Singapore?
Yeah, if you contrast that, for example, during the COVID situation, what we actually saw was Malaysians were less likely to sell when markets are down versus Singaporeans. So I don't know whether that is a cultural thing, whether that's a behavioral thing, but that's just what the data suggests, right? So obviously, I think that looking at just that one piece of data is not enough. But across the board, the real differentiator between someone who makes money and someone who panics and loses money is really using their prior investing experience to do the right thing, which is to continue investing, regardless of whether it's down or whether markets are reaching all-time highs. So what we see in different countries is actually the funds management industry or the wealth management industry being quite different. Some places like Hong Kong and Singapore, there are a little bit more choice than in Malaysia. There's more access to global markets, for example. But in all those markets, we actually see that wealth management or the financial products, the industry is actually very, very high cost. If you rely on banks to supply you with financial products, it'll be very, very high cost. Places like Hong Kong, Dubai, Singapore, Malaysia, where we're in, the insurance and also fund management industry have very, very high costs. So because of that, people face frustration, right? And that's where digital platforms really help. So that's why you've seen the explosion in digital banks, digital brokers, digital fund managers like ours. So there's things you can notice about your surroundings when you look at your trends, but sometimes you must be a bit ahead of the curve because you learn new things and you actually find ways to not just save costs, but actually look at investing in a much better way to get better returns, right? So I think if you rely on just conventional investing methods like relying on your EPF or relying on your ASB, you can see those returns are slowly going down because of structural reasons. The funds are getting larger and larger. It's harder to emulate those returns of yesteryear, like 8%, 7%. Nowadays, 5% also very happy already. So I think you need to look overseas to start diversifying your portfolio so you can take a little bit more risk, but also expect better returns.
Right. Hey, thanks so much, Waiken, for the extensive elaboration regarding investments and how people can actually learn various tips to jump right into it, right? So in the topic of jump right into it, how can we actually join Stashaway? Can any legal person above the age of 18 join, or how's the requirements like actually?
Yeah, it's actually very easy. It's not difficult at all. All you have to do is go to the Play Store or the App Store and then just download the Stashaway app. It takes you around 15 minutes to get registered. We only need your IC. And once you deposit your money, we will put your money to work. So you don't need to worry about like when exactly do I do the Stashaway invest. As long as you put your money in, we will invest it 100% for you. And you can once you do that, you can monitor your investments. You can withdraw all from the app. You don't need to see me. You don't need to sign any forms or anything like that. It's all very straightforward. And while you invest, you can also ask us questions. We have a WhatsApp button where it's linked to WhatsApp, and then you can just if you want to know what's going on with your money, you have some admin issues you want to ask us, you can always seek help, because we have a great customer service team working 7 days a week during business hours to actually solve your issues and help you with investing. So all in all, it's a very simple way of actually getting your money to work harder. Please do your research, go online and look up on some of the reviews, go to our website to see how we manage your money, go to look at our returns in the past 3 years. And then when you've made your decision, we'll be there for you, and all the best in your future investing.
All right, thank you very much, Waiken. So we've come to the end of this session. I bet not even the audiences, even me, I've learned a lot regarding investment, how Stashaway is making a difference within this industry and whatnot, right? So all right, thank you once again, Waiken, the country manager of Stashaway, for joining today's session on Data Asia. So coming right up next, stay tuned for the next show, as we will be live very soon. Bye, guys.
And thank you, Mr. Wong, for your valuable insights.